Good afternoon, everyone. Welcome to the ESS BIZTOOLS COVID-19 Survival Panel. Today I have presentations for you on virtual Chief Financial Officer services in a challenging environment and crowdsource funding equity raising strategies for accountants. I'm joined by Dale Crosby, and Dale will be talking to you in a moment. Dale's the Director of High Tech Soft Touch, and I'm the Managing Director of ESS BIZTOOLS. If you have any questions during the webinar, can you please type them into chat, and I will convey the questions to Dale during the webinar. Or if you're watching this broadcast at a later date, maybe a time that's more suitable for you, please send me an email with your questions, peter@essbiztools.com.au, and I will pass the questions that relate to Dale's presentation on to him, and we'll get Dale's answer back for you. And if you've got any questions for me, I obviously will reply to you, and we will be publishing the questions and the answers on our website. So today's presentation, the first one, is going to be made to you by Dale Crosby, Director of High Tech Soft Touch. How are you today, Dale?
Really good, thanks, Peter. How are you?
Good, thank you. So I'm going to switch across to you there now. You're on screen, and I'm looking forward to hearing from you.
Great. Okay, let me just share it so you can see my screen.
Yes, thank you.
Brilliant. So if you also have, Peter, have any questions as we go through the presentation or comments, please share them, and I'm happy to take any questions as we go through today's session.
Thank you.
We ran a session about a month ago on virtual CFO services, and I thought I'd extend that at this session by talking a little bit more about how we can use this opportunity, let's look at it as an opportunity, to develop relationships with our business clients. And I thought I'd look at some of the challenges and opportunities that are out there. There's no question, there's a huge amount of interest from accounting firms now in relation to how they can develop their relationship with business clients and how they can actually add value, but also get obviously a fee for service as well. But there are all sorts of challenges we've got at the moment. I'm getting a great deal of interest in my virtual CFO course. During the week, I've had a number of chats with the president of the Virtual CFO Association in Australia, David Dillon. If you're not familiar with that organisation, it's worthwhile having a look at. And he was also, sharing with me some of the challenges and opportunities that he sees out in the market at this particular point in time. There's no question, as the AFR mentioned a few months ago, accountants becoming the centre link of the business world.
And that I don't know if it's the title that accountants really wanted, but nevertheless.
No, well, it's not. But I guess what he's trying to say is that accountants are the go-to people, and particularly in relation to a lot of the compliance issues that have arisen around JobKeeper and other COVID-related stimuluses. So there's real opportunity there, and that opportunity has kept us very busy in recent months. And I suspect most accounting firms with business clients at any level are having ongoing contact with their business clients in relation to these matters. So that's created an opportunity. We're engaging with our business clients pretty consistently and regularly. I'm interested to know whether we believe we're really using that opportunity to develop relationships, or whether we're still stuck very much in the compliance role, delivering requirements to ensure that our clients can obtain the stimulus packages that they're entitled to. And I think that's one of the major challenges that we've got. The NAB produced a monthly business survey which looks at things like business confidence and conditions, and it's clear. I mean, obviously, 2020 has been a real challenge in terms of confidence. But even over the last month or so, we're seeing further reduced confidence, which I suspect will continue to show through till next year. And it's possibly 2021 where we'll really start to see things bite. When some of the stimulus payments that business owners have been receiving will either dry up or be available at a much lower level. And that's where the opportunities will really arise. to help clients, but also creates certain challenges and issues in relation to our clients being able to afford those services. Another article from the Financial Review, it's COVID-19, a bigger catalyst than GFC and 9/11, from a new Creditor Watch chief economist who's just started looking at what's likely to happen over the next 6 to 12 months. And this gentleman has noted, as we all probably believe and understand, that we should start to see a significant rise in insolvencies, certainly towards the end of this year and into 2021. So there's a need for many of our business clients to look at how they're structured, and if they haven't already taken steps to restructure, then no doubt they'll be looking at that over the next 6 months. Obviously, we don't necessarily want to be having conversations with all of our clients about insolvency, but clearly there's a need to sit with our clients, or there's an opportunity to sit with our clients and talk to them about their issues and challenges from a financial point of view, and what they're doing to plan for the months and the year ahead. I know in the conversations I'm having with my business clients, I'm starting to have those now at a fairly high level. Accounting roles are increasingly in demand. A recent Hays survey found that financial accounting, budgeting, and data analytical roles will be the top 3 priority positions that employers, business owners, are looking for within COVID-19. So clearly, an outsourced CFO or an outsourced business advisor has a real role to play in helping businesses to understand the issues that they've got financially and helping them to make the right strategic decisions, particularly for a lot of our employees in relation to staffing as well as other operational costs. At the risk of telling you how to suck eggs, I just thought I'd go through 6 key reasons why business clients need a strong accountant at this time. And sometimes it's good for us to reinforce in our own minds the value that we add, and perhaps also reinforce in our clients' minds why we're there and the things that we can do apart from simply being the Centrelink of COVID for our business clients. Obviously accessing government funding at this particular time, accessing tax breaks and benefits which are out there. But beyond that, building better financial processes, which are critically important. Identifying opportunities for growth, even in these difficult times. There are definitely opportunities out there, and we're seeing some really innovative actions and directions from agile firms. Developing financial forecasts for security and perhaps for applying for finance and planning for future financial success. So they're the conversations we should be having. How many of you are having those conversations with your business clients now, or are you still very much stuck in the compliance role, simply trying to get through the process of making sure business clients get the payments that they're due to get? So I think it is probably still a challenge for many businesses to extend the conversation beyond compliance to advice. So challenges I see, certainly for us, keeping up to date with COVID stimulus, fair work. Things change on a month-by-month basis and sometimes on a week-by-week basis, so it's important to keep up with changes in relation to the economy in general, in relation to specific industry sectors. Providing regular financial updates for clients, letting them know what things they need to be looking out for. I know many firms I've been talking to are having challenges charging clients for services provided out of scope. They started in the COVID environment by providing services because they were needed, and perhaps in some cases didn't really take the opportunity to let clients know what was within and outside scope. And that's a fairly natural thing to do. Our job there is to help clients. But the trouble is, if we start providing services outside scope, then it's difficult to go back and have that conversation with the client again. Because clearly the client's going to say, well, you haven't done that over the last 6 months. Why now are you coming back to me and telling me you need to charge me? I thought that was included as part of my service. So I think we need to challenge our people to make sure that we're recording all time spent on client work and then making some clear decisions about what we should be charging clients for. I remember a conversation I had with a firm I've been working with for 2 years. One of their senior older accountants said a couple of months ago, we shouldn't be having these conversations with our clients now because they're in a bad way and they need our help. It's only going to add pressure to them. I understood what he was saying, but the problem is we're providing a service. And in essence, what he's saying is, well, if we don't have that conversation, we're either we'll try and get that a return for our investment down the track, which is unlikely, or alternatively, we just accept that we're going to be providing a service at no charge. And now that's a decision anybody can make. But there's a strong correlation between a perception of value and the fee that we charge for a service. So we need to be consistent and we need to be strong in the way that we consider these issues. We're drowning in compliance again, and it's hard to get out of it. And I think debtor management for some clients is becoming an issue. And from next year, from what I see in relation to industry trends with payment of debtors, there are going to be issues with credit squeeze in 2021 without a doubt. And we're going to have some challenges in getting payment from some of our clients in the months and the year ahead.
Yes,
So
and Dale, if I can just make a comment there, if accountants have allowed the clients to get into some bad practices through these difficult times, it's going to be very difficult to try to catch that up next year, isn't it?
Definitely, yes. That's why now is the time that our clients, business clients, should be starting to think about what they should be doing next year and planning ahead. And also planning ahead in relation to the support that they need from us. So I think that they're the challenges, the opportunities, obviously, to enhance our relationships, which means going beyond the compliance to look at a future focus. More regular financial reporting and meetings, really important to ensure that our clients are able to provide information which is timely, which they're more or less required to do now anyway, even if they're to be eligible for stimulus payments. There is an opportunity to attract new business clients requiring support. One advisory firm that I've been working with over the last 8 weeks has attracted around about 150 new clients. And they're not all business clients. Some of those are individuals. But it just goes to show that there is some churn going on out there from clients who are not getting the support and the advice that they need. They're going out into the marketplace to look for it. And if they can find that other accountants can provide it, then they will consider moving because they're in pain. So I actually think now is a real opportunity to get out there and let our marketplace know what we do and how we do it. Obviously, there's an opportunity to assist with restructuring where it's appropriate, or even redundancy issues in collaboration with some of the Fair Work changes, which are, again, happening on a fairly regular basis. I'm seeing accounting firms start to convert fees to periodical payments, meaning that where there are fees outstanding, perhaps with firms that are clients that are struggling to pay, then there's an opportunity to go back to them and say, well, let's amortize the fee, past fees and the present and future fees across the next 12 months. Let's set up regular payment plans, and then we can continue that process in moving forward. So I think that's quite healthy as well, if we can use that opportunity to manage our own debtors, but also to manage our clients' cash flow. So just quickly, some of the things we need to think about. Scope and fee for service. It's critical to show compassion to business clients, but we must always remember the value of the service we're providing. If we don't charge, the value is not perceived or understood, and inevitably it's perceived to be part of what we do. It's extremely hard to go back. Clients need to understand that additional scope requires additional work. At some stage, we'll have to charge for the service. If we discount it now, it'll be very difficult to charge for it down the track. So I recommend that we have those conversations with clients now that we're not scared to, just to be upfront. And even if we say, for instance, that we're going to wear the cost for a particular client over the next 3 or 4 months for whatever reason, then we need to let the client know that we're actually doing work for nothing. The worst thing we can do is do that work and not tell them, because it makes it so much more difficult down the track. And we should be invoicing in a timely manner, not letting our WIP increase in the hope that in June or May 2021, we can send an invoice to the client which covers all the work that we've done over the last 12 months that we haven't told them that we're going to charge them for.
That would be very dangerous, I think, wouldn't it?
Yeah, but I'm only saying it because I know there'll be firms out there that'll do it.
Yeah.
Unfortunately. So where possible, let's look at starting to look at amortizing fee for service, where business clients are struggling to pay, bring them into periodical payment plans. Consider practice ignition or similar platform to manage scope and payment. Amortize past and present fees into a payment plan if appropriate. And consider fee funding or as another option if it's necessary. There are so many options out there at the moment, and in addition to those, there are others as well. The banks, although there seems to be difference of opinion as to whether they're really keen to loan funds or to provide business loan support, they're all saying that they're doing it. So there's obviously that opportunity to help our clients get through that process. What's your experience, Peter? Are you seeing any of that happening yet?
I'm being told that they're very difficult to deal with. I haven't actually taken a client to a bank for some time, but the accountants that I'm dealing with are saying that they're difficult and it's hard to get loans across. Yep, I just note that in the publications like the Financial Review, they have been writing for months that they expect once we got to this end of September period that seeking money from banks was going to be difficult. Now that JobKeeper has been extended, of course, and now that the insolvency protections have also been extended, maybe that blows out a little longer, the period before banks might be tougher to deal with. But the banks have obviously increased their exposure very significantly to the small, medium enterprise marketplace over the last 6 months.
Yeah, definitely. So, we'll see what happens over the next 6 to 12 months in relation to that support. One interesting little bit of news over the last week: Xero acquires Sydney invoice lender Waddle for 31 million. So Waddle is in essence, I think, a way that business clients that require short-term investments of cash flow can offset their invoices and receive payment up front. It's not something that every business wants to do, but it's interesting seeing what's happening out in the marketplace now. Processes that some small business owners will certainly look to if they're experiencing problems in collecting.
Yes.
Collecting money. So it's in essence, it's an invoicing finance option. But it's interesting to see that Xero have obviously seen the opportunity to get into this area of focus as well. So we'll probably see a lot more of these creative ways of helping businesses address their cash flow issues over the next 18 months, where they believe that they can get themselves out of whatever situations they're in at the moment. So what sort of conversation should we have with business clients? I've identified 3 stages which help us to move from historical analysis to future focus. We're already having the conversation at stage 1. Let's ensure that you receive what you're entitled to receive under government stimulus programs. This is what we can do to help. Do you want our support? And hopefully a lot of business clients are putting up their hands and saying absolutely, particularly because you're the experts. We just need to focus on making sure our business survives and takes advantage of whatever opportunities are out there. We need some support in the background to make sure that these other things are happening. Stage 2, and this is where we start to have a bit more of a focus on the future and the present. What is the current impact of the pandemic on your business? How is this affecting your ability to pay expenses and retain staff? What support do you need? Right now, we should be having that conversation with all of our business clients. We should not assume that any of them are okay. Chances are some of them are actually doing very well. There are always opportunities in any particular environment. But that's what we should be asking every single one of our business clients now. And if we're not, honestly, I think we're being negligent because we have the opportunity to add value. If we don't know, then we can't help.
Last week I was talking to an accountant who runs a small practice, and he was talking about what had happened during this period. And he said that some of his clients, his SME clients, had indicated to him that their mates, their competitors down at the pub, were making comments like, how come your accountant's contacting you all the time when they made a comment that Colin was in regular contact with them? Some of them claim they had not heard from their accountant for months. And I found that very surprising. But
I just find it's incredible, considering now is the opportunity to have these conversations. And if you're not, then obviously there's probably a lot of support that our business clients could be getting not yet. Simply because they're not aware or they don't know how to go.
No, you're breaking up there.
Can you hear me now?
That's a bit clearer, yeah.
Okay, no worries. And so that's the second question. Where are we at now? And then the third stage.
No, it's still breaking up, mate.
Yeah?
Yeah, a bit better, yeah.
Okay, we'll see how we go. The third question is, how do you see the current environment affecting your business over the next 12 months? Do you need to consider restructuring, redundancies, etc.? What support do you need to make the right decisions? So now we're starting to get into forward-thinking conversations. We're starting with historical analysis and compliance. We're then talking about what's happening at the moment. And the third question, which is most important, leads us into the role of a business advisor or virtual CFO, is how do you see the environment affecting your business over the next 12 months? What do we need to do now to anticipate and handle the issues that are likely to occur? So in essence, we need to start looking not only at the numbers, but beyond the numbers. And although I don't know if I'm going to get accountants to give me this expression, I know deep down some of them are probably thinking about it. You want me to do what? In other words, you want me to start having rich, deep conversations with clients that actually explore what's going to happen in the future. I'd start by challenging you to consider whether you really know your clients. You may have very strong relationships with your clients around the conversations that you've had with them in the past. But at this particular point in time, the conversations will change. Their issues and challenges are different, both at a business level and at a personal financial level as well. So we should be asking these questions. What do you really want to achieve? Are you on track to do this? If not, why? What are your short-term goals? What actions will you take over the next year to achieve this? What roadblocks and challenges do you see getting in the way? What will you do to overcome these, and what support do you need? Often I talk to partners and directors of firms, and they say, we have these conversations all the time. And I say, that's fine, but do you actually ask these questions? And they say, well, not really, but if the information comes out. I don't believe that. I've seen enough of working in this industry over the last 20 years to know that we're not always asking the questions we think we're asking. And the best way to do this is simply to ask the questions. Say to our clients, look, there are 7 questions I'd like to ask you. Have you got 10 or 15 minutes? And then ask each question one by one. That will ensure that the things you think you know about the client are confirmed, or if not, then the issues and challenges the client is experiencing will come out. So it's really important to have a structured approach. Where should we start? Send weekly updates to clients in relation to stimulus payments, fair work, business challenges, and how you can help. I've had a few comments from a few people I've been working with and talking to. We can't possibly send e-bulletins out to clients every week. We'll annoy them. I've actually done this personally through a few firms that I work with, and I can guarantee it has an enormously positive benefit. Any clients who don't want to receive weekly emails will tell us anyway. But by far the majority of them appreciate that regular background contact, just to keep them up to date. We should establish an engagement plan. In other words, a plan of contact for all business clients receiving JobKeeper. And as well as doing the compliance work we're doing, set up a monthly how's it going call or email. It's a simple thing to do. Even if we can't have time calls, let's send an email. We should be identifying business clients experiencing financial pressures and actually ask them what plans they have in place when the stimulus payments cease or decrease. We should be asking clients for feedback on their business confidence and also their perception of the services we're providing. And I recommend using online feedback platforms like GatherUp to survey clients and Net Promoter Score to get a very simple indicator of how clients are going, both in terms of, again, their own business confidence and their perception of what we're doing for them. And that works extremely well. An example, one client who has a good mix of individual and business clients has probably sent out 300 surveys over the last 6 weeks and got about 160 responses. So that provides opportunity to then engage with clients that really need the support. And finally, we should be ensuring clients understand scope and fee for service. I suggest regular payment plans for clients who are struggling to pay invoices. Example, those with debtors greater than 60 days. Let's anticipate those issues rather than wait till they become real problems. If we can anticipate them up front, the client has also got a clearer mind and they're more able to make the decisions they need to make as well. So that's just some general thoughts about how we can really take control of the relationship we have with our business clients during COVID. Just to finish up the presentation before I hand back to you, just a few slides that I also presented at my last session, just really talking about the evolution of the role of the accountant to analyst advisor and the CFO. When we're performing basic analytics, we're evaluating past patterns and understanding the reasons behind those patterns. That's stage one. And stage 2 and 3, they're starting to predict the future based on what we've seen in the past. And we use the data to help our clients make the right decisions. Sometimes we need to explain what we do in pictures to a client so they actually understand the difference between what we've done in the past and what we're doing moving forward. And perhaps a slide like this or some way to explain this is going to help us get the message across, rather than simply saying we're here to provide business advice. That's a bit of a yawn these days. Most clients don't actually understand what it means. So there's no question the virtual CFO role is going to take on increasing value in the years ahead, particularly because we're able to provide this service to small business clients in a leveraged fashion. It's simply not a service they can afford themselves, but because we're providing it to a number of our clients, we can leverage the service delivery and we can provide it in a cost-effective way. Again, it's important we understand our value proposition and we can communicate that to our clients. And this slide just gives you a few ideas and thoughts on how you can communicate that. As a business owner, what are your options? Are you equipped for the challenge ahead? How will you stay ahead of the game? Virtual CFOs are more affordable than you think. We can help you to actively manage your business, plan for the future, improve internal processes, and implement internal controls. Get a clear understanding of what it is you do and make it real. Now is the time to have those conversations. And those services might include any or all of these services. This is the result of part of the result of a survey that I've done about 150 firms over the last 6 months, looking at what services they provide outside traditional tax and accounting. If you're interested in looking a little bit more about what's involved in delivering these services, we run a number of courses, including a virtual CFO course, which is a self-paced online program, and business analyst course. So go to cpdforaccountants.com.au and have a look at those if you're interested. So Peter, that's me giving a quick half-hour discussion about the opportunities that lie. I mean, challenges always bring on opportunities. And if we're not taking advantage of those opportunities now, we're really wasting that chance. I think those firms that are being proactive are seeing tremendous change in the way that they engage with their clients, and hopefully that'll continue in the long run.
Yes, thanks very much, Dale. I agree with that. I think the accountancy profession has got a very welcome opportunity, I think, over the next 2 years to really identify that accountants can undertake a broader range of professional services than traditional annual accounts and taxation return preparation. COVID-19, we can thank it for something, I think has brought some of these issues to a head and is saying to accountants that we can do this. Saying to accountants, first of all, that you can do it, and obviously clients are appreciating it. The CommBank's report about the accounting market pulse, where for the first time I saw that business advisory services was being shown in the headline, if you like, has really identified that accountants are being looked at, and accountants themselves, some of them anyhow, are accepting that accountants can offer this broader range of services. The real challenge now is how we implement it. So thank you very much for your presentation, Dale. Your service that you're providing for the development of CFOs is a great support service in this whole journey of helping at least a reasonable percentage of accountants in public practice to be very mindful of this requirement in the marketplace for SME clients to be receiving a higher level of service than taxation and the preparation of annual accounts.
And also supported obviously by all the content that you provide for your assistance as well.
Thank you. Okay, well, what we're now going to move on to is another key aspect, I think, and that's financing of businesses. And this relates to crowdsource funding equity raising, which does require accountants to be wearing a chief financial officer's hat, I think, to be able to perform these services. So it follows on from what Dale has just shared with you. So let's look at crowdsource funding equity raising, because I think this is a new opportunity. It's an opportunity for your clients to raise capital. And in Dale's presentation, we had a short comment about whether there is going to be difficulties for companies, businesses to raise capital from now on. I suspect there is. I suspect finance is going to be very tight next year. That's when Dale was referring to debtors' days outstanding, blowing out. How are your clients going to fund their business? Now is the time to be thinking about this. There's plenty of money in the overall system. I talk to the crowdsource funding intermediaries, or 4 or 5 of the major intermediary businesses, very regularly. And they tell me there's plenty of potential investors there. There's a lot of money out there. People are looking for reasonable investments. So there is an opportunity for private companies to raise capital without having to produce a prospectus. I still find some accountants think that crowdsource funding is very similar to doing an initial public offer. It's really not. Companies can raise up to $5 million in a 12-month period. They've got to go through a process, and it's a legal process, but it's nowhere near the difficulties of doing an initial public offering. And the big advantage for your clients is they can do this without having to offer anyone any security. And there's no personal guarantees. And there's definitely no monthly repayment of principal and interest. So why wouldn't your clients, who are running well-planned businesses with a leadership team that have vision and enthusiasm and vigor, why wouldn't they be interested in looking at whether they can raise some capital? So please bear with me as we work through this. And in the back of your minds, please visualize your clients that have got turnovers under $25 million. I don't think many of them can do this on their own. They need your assistance. It is definitely wearing that chief financial officer's hat to get them actively involved. I've already told you that. Their gross assets also have to be under $25 million. I don't know whether there's any science about that, but it's the same amount. And they cannot be listed on a stock exchange anywhere in the world. And they need a minimum of 2 directors. Whereas normally a private company obviously only needs a minimum of 1. So I think this is a great opportunity for SMEs, because this is part of a material shift in business ownership, because crowdsource funding in the main is targeted at retail investors, the so-called mum and dad investors, the small superannuation funds who are looking to invest in their suppliers, their customers, their friends, the guys they play golf with or bowls with or perhaps go to bingo with who are running businesses, and they know they've got the opportunity of buying some shares in their business and they want to do so. And we're playing catch up. I've had some people suggest to me that we're trying to be the world leader again. Well, in this area, we haven't. In fact, we lag behind. We are at least 6 to 8 years behind other countries like New Zealand, USA, UK, where this market is huge, Canada, Singapore, Germany, France, and other parts of Europe. So I think crowdsource funding equity raising is changing the capital market model around. Companies can go and raise this capital before they need to talk to a venture capitalist. And many of you know Andrew Geddes, and Andrew, who was the chair of Green Cross Limited for 9 years and is well known as one of the founders of Financial Management Research Centre at the University of New England many years ago, has indicated that he believes there will be a drop-off of companies going to venture capitalists and having to undertake IPOs. If they can come back and raise $5 million for a few years each year, utilising crowdsource funding. And this is a project that the accountancy firm should be involved with. Don't let your clients go off and talk to someone else. You should be able to do this yourselves. And this will broaden the skill level within your firm, give your team some very interesting work to do. So what type of industries? Virtually any type. I have not yet thought of an industry that can't utilize crowdsource funding. The restriction will be if there is some restriction within an industry organization, which says everyone must operate as a sole trader or as a partnership and nothing more. But other than that, there is no restriction. The intermediaries definitely are not putting up any, and there's nothing in the legislation. So what type of company? There's no doubt that it is preferable if your company or your client's company have got some fans. Fans are supporters, customers, suppliers, team members. They need an enthusiastic leadership team. This is not for a company that's ready to pension off everyone because they've run out of enthusiasm and spirit. They've got to have that. It doesn't matter how old they are. They might be well into their 70s or 22 years of age. Doesn't matter. But they need that strong leadership team. But they also need a product or service that can create some enthusiasm in the market. They've got to be able to talk about it, demonstrate it on a video so that it can be promoted to the broader Australian market. And let me emphasize, this is not crowdfunding. I think it's unfortunate that the government decided that in Australia, crowdsource funding equity raising would have that name. It might have been better if it was differentiated from crowdfunding, which had been there in Australia longer. And this is where people are seeking donations because someone's got a serious illness or has been in an accident or unfortunately has been killed and the family hasn't got enough money to pay for a funeral. And in some cases, it can be because someone's just about finished a prototype of a new product and wants to raise a further $5,000 or $10,000 to complete it. But crowdsource funding, equity raising relates to the purchase of shares in a company. That's what the investment is for. It's not a donation. And the investor becomes a shareholder. And sure, some of your clients might not like the idea that they or their group of family or friends will not own 100% of their company as a group from now on. But this is part of developing a business and developing money within the business, developing capital. So you don't have to own 100%. Just look at the Murdoch family with News Limited. The crowdsource funding shareholder has the same rights and privileges as any other shareholder in that company. So who are the investors? Well, we can have this person called a retail investor who can invest a maximum of $10,000 in a 12-month period in a company. There's no limit for sophisticated investors. Incidentally, 74% of the investors in crowdsource funding in Australia so far have been from retail investors, according to the surveys undertaken by ASIC, 74%. So it's opened up great opportunities, and that related to about 34,000 individuals have invested in these companies. Investors obviously receive share certificates. So how does it operate? The company needs to be able to articulate its vision. This is who we are. This is what we want to do. This is where we're going to be in 3 to 5 years' time. So that's going to be supported by market research and a marketing plan. Now, both of those jobs are probably outside of the work that you as an accounting firm want to undertake. It might not be in some cases, but it might be that you're able to influence who's going to do that work because you've developed a professional affiliation with some market research organizations. Your client is definitely going to need a social media presence. Social media is working hand in hand with the development of crowdsource funding. It's very, very important that your client has a presence on Facebook and LinkedIn and probably some of the other social media channels. I've talked about leadership. Directors are also very important. They're probably part of the leadership team, but they need to understand their role and to appreciate if they need some further training. They, like all of us, need ongoing professional development. They should be undertaking the directors' training courses. And part of the package that you would utilize if you joined ESS BIZTOOLS as a subscriber would be that you are mentoring the company directors and leadership team as to what this whole capital raising process called crowdsource funding equity raising is all about and how it works. And it's important that the company has started some communication with fans. Now, one of the reasons I'm going through this like this is perhaps the company's not going to be ready to start raising money until the new year in February. Well, this preparation can start now. Make sure social media is working. Make sure there's information going onto social media and hopefully into the local news organizations that can communicate what the company's about. So the company is building up its fans, because this is the key group of people that will be initially approached to become investors. So who are the fans? Customers, suppliers, team members, people living in the company's region, wherever it's operating, especially if the business is located in a regional area. But in a metropolitan area, well, we've got zones that are well known, haven't we? We've got Western Sydney, we've got Southern Sydney, we've got the Campbelltown area, we've got North Shore, we've got different areas. So make sure that the company is exposing what it's doing to those regions. And the company needs a website that links back in with what the message is being shown on social media. Media releases to the local media. And it's very important, as I've indicated earlier, the directors and leadership team members should be making sure that they have a clear understanding of crowdsource funding equity raising. And I envisage that accountants, especially utilizing the material which we make available, you will be able to mentor your clients on how this new phenomenon of being able to raise money, capital from the public without having to give personal guarantees or supply security, how it works. So what's your role? Have you got one? I think most certainly. Most certainly. Please make sure you're going to take this up. This is performing the Chief Financial Officer role that Dale's just referred to. You need to be able to mentor these directors and leadership team members. You need to, I think, be bringing that team together and facilitating a business review meeting to make sure that you get all the documentation ready. Because the company is going to be subjected to a blowtorch type evaluation, first of all by the intermediary that you ultimately select to appoint as the crowdsource funding intermediary for this client, this company. But then that business is going to be exposed on a far broader scale because the intermediary that's selected will be promoting this company on their website. And anyone in the world can then click in to view about it. So the company needs a business plan. And a business plan shouldn't be just something you go away and write. It requires input. So it requires this facilitation of business review meetings, getting input from the leadership team, the other team members and the board of directors, and perhaps some customers and suppliers as to what is required. The financial accounts need to be finalised. The intermediary will want to see them. The information has to be disclosed in the offer document. Develop budget which links to the business plans. Very important. Business plan says the company's going to do certain things. How's it going to fund it? And then the cash flow forecast. Now, obviously, the drop-in figure will probably be what is anticipated to be raised through capital raising through crowdsource funding. And I see it that you've done that first part of the work, and then you formally set up some meetings with the crowdsource funding intermediaries. There are 16 businesses in Australia that have received licenses from the Australian Security Investment Commission to be the intermediaries. And they wear two hats. One hat is basically as the representatives of ASIC. The second hat is that they have developed their own databases of potential investors. Databases which, according to the intermediaries, have somewhere between 25,000 and 50,000 names on each of them, so that they can communicate with them each time they accept a new company onto their register to help them raise money. Your clients are going to need your guidance as to who to talk to in those intermediaries. There are 5 of them at present who are doing most of the work in Australia. And we can give you introductions to those because we're in fairly regular contact with them. And once you meet with them, your client, with your assistance, I'm sure, need to select an intermediary that you are going to suggest to your client that they contract with. So they need to enter into a contract with the intermediary for the role that the intermediary will be performing. And then it's the time to prepare the crowdsource funding offer document. Now, this is the formal document. It's equivalent to a prospectus, but it needs to be developed and approved by the intermediary. So what's the timetable? I think it would take 2 to 3 months for most of you to get your clients ready from their current position. They've got a good business. They're starting to get an inkling that they're going to need some money. They don't know where they're going to get it from. They haven't finished their June 2020 accounts yet. Well, they need to be finished. And they need to have this understanding of crowdsource funding and some interviews with some of the crowdsource funding intermediaries who are all based in capital cities, the vast majority in Sydney. And you can obviously communicate with them via Zoom. And you need to make sure that there's strong commitment to this process, not just one director wanting to do it. There has to be a team approach. The key executive will be the CEO and the board of directors, and especially the chair. But everyone in the organisation needs to be enthusiastic about this, otherwise it won't work. And that role to achieve this communication, this spirit, is obviously the chairs and the CEOs, but it also, I see it as part of your responsibility to make sure that they understand this. And once you've been through that preliminary process, the intermediary wants 4 to 6 weeks to do some initial marketing, to get the videos prepared, to get the website prepared that they're going to run on their website, the promotion on your company, to make sure that their legal team have checked the crowdsource funding offer document, to make sure everything's lined up. And then they are ready to go. And the legislation says there is a maximum of 90 days in which that listing can be on the intermediary's website. It can be lesser, but I always tell everyone, always take the 90 days, because if you nominate a less period, that is it. So if you only say 20 days and in 20 days you haven't raised your minimum capital requirement, you have to refund all the money, or the intermediary has to refund all the money, because the subscriptions are paid to the intermediary. So do you think it's a great opportunity? You're being involved in the initial briefing to clients, the mentoring process. I was talking to Dale earlier and I said that's at least a day. That's what I factor in, a day workshop with the leadership team and the directors, and in some cases the entire team, to make sure that they all understand what this process is about. And then we start developing business plans, budgets, cash flows, and the crowdsource funding intermediaries, the offer document to give to the intermediaries. Start working out what the fees are from this particular work. I think in the vicinity of that total $40,000 to $60,000. And there is the real possibility of getting ongoing chief financial officer appointments, what Dale was talking about before. Because some of these companies, whilst they need prompt, regular, accurate financial reports and analysis of KPIs and all sorts of other things that Dale was referring to, it's probably not going to be a full-time job. So they'll be looking for a virtual CFO appointment. Who better to do it than your firm? You've helped them right from the start. You're the incumbent, and it will broaden the opportunity of work in your firm and will give your team members some very interesting work to do. So I think there is a great opportunity for you to supply this broader range of services and get the virtual CFO appointment, because the company has been on the ground floor and it is now going through the start of a scaling up process. They might want to do this again next year. They might have only decided to raise $2 million in this first tranche of capital raising. But then once they've raised that and they've understand the process and they see some more opportunities, they might then next year want to raise another $4 million. And they can continue to do that. They've got to go through this process each time. They're going to need your assistance. So I think 2021 is going to present some great opportunities, because I think banks are going to be hard to deal with, and many of your clients are going to require funding, and it will be interesting and varied work for your team. It's a great opportunity for your firm. Please come on board. Please show some interest. And if you want to, we're quite happy to have a special webinar presentation to your team so that they can become more appreciated. Dale, have you got any other information or questions that you'd thought of relating to crowdsource funding?
I think, yeah, as you said, again, we've got tremendous opportunities to add value. We just need to make the time to sit down and consider what our clients need, and develop some internal capability, but just try to explore how we can have conversations with clients that lead to identifying these opportunities. If we don't have rich conversations with clients, then all we end up with is a list of services we can provide, and nobody really understands what they offer. I think that's half the challenge.
Okay. Righto. Well, we might just move on to finish this webinar today. The COVID-19 news update. There's a lot happening, of course. Some of it was announced some time ago, But the big announcement of this week has been the insolvency relief package that the government brought in some months ago has been extended until the new year. And that will be welcomed by a lot of businesses. But there is a word of warning on that. Sooner or later, that's going to cease. And now is the time. You've got now a further 3 months to help get those clients organized that are going to potentially run into problems once those embargoes on lenders taking action or people being able to allege insolvent trading are going to be removed. Now is the opportunity as accountants really offering the CFO service to be talking to those clients and trying to get their house in order. And there's no reason why you couldn't be looking at crowdsource funding if they really need money, as long as they've got a good story to tell, as long as they've got those fans and that good product. If you want to talk to me about that, please contact me. The other news is the coronavirus SME guarantee loan, the new loan, upper limit of $1 million, which is going to be available until June 2021, starts on October 1. The current loan's still available, $250,000. And they're 50% guaranteed by the Australian government. So what's your action plan? If you'd like to have a discussion about introducing business advisory services to your firm, please contact me. And obviously, if you're interested in talking to Dale about the training for the delivery of Chief Financial Officer services, please talk to Dale. Why not visit us? We're happy to talk to you at essbiztools.com.au. Go to our website and have a look. And you can book in a one-on-one telephone or Zoom meeting with me, where I will talk to you and give you some consulting advice on the types of products that we have developed that I think suit your firm. We've got a vast array of products. Some of you do not need them all. You can pick which ones you want, and we will be happy to discuss a subscription arrangement with you. Our next webinar in this series is on the 25th of September, and you can register by going to our website, ESS BizTools. It's on at 12 noon AEST. And the presenters are Ashley Evans, a Managing Director at AAA Financial Services. Ashley runs a financial type service. He's an ex-National Bank manager, and all of his team, bar one, so 9 other people are all ex-bankers, and they have an interesting overview of the business world. The other speaker is Priscilla B. Smith, who's the Director of Cloud9 Associates in Brisbane. And Cloud9 helps prepare people who want to get licenses from the Tax Agents Board to be tax agents, and for the business activity statement preparations. And you can register for that webinar, which is on the 25th of September on our website, ESS BizTools. And if you want any more information, please contact me. Give me a phone call, 1-800-232-088, and I'll be happy to talk to you, because we are in challenging times. So please stay safe. Thank you for being with us today. If you've got any questions of Dale, please send me an email and I will pass it on to him. And if you've got any questions of me, please send me an email. Dale, thank you very much for being with us today, and good luck with the training of Chief Financial Officers. The accountancy profession really needs these types of services. So thank you very much. Thank you for being with us, either on the live webinar or watching us at some time that suits you. But if that's 3 a.m. in the morning, please don't give me a ring then. Please leave it until about 8 a.m. and we will get back to you. Have a great day. Goodbye. Thank you, Dale.
Thanks, Peter. Cheers, mate.
Thank you.